Hello everybody, it's Joe Fahmy with a bonus content video discussing my second half outlook and 5 stocks to focus on for the remainder of 2020. Now, part of the reason I'm doing this video is because there's some new members who have joined recently. Thank you so much for coming aboard, and I'm very grateful for that. And some of those new members haven't heard my sort of macro views over the past few months, so I wanted to try to sum them up in this video. And then with regards to stocks to focus on, I posted a video on May 4th as well as June 17th with about 25 to 30 leaders to focus on. These 5 are some that are buyable now that I also feel have great potential over the next 6 to 12 months. So with regards to my outlook, I'm bullish. I feel that we're going higher into year end for the following reasons. One, there's very little distribution on the NASDAQ composite. As you can see here, we've just had very few days of, let me pull out the pen, very few days of distribution. And the reason this is important is that the big institutions control the markets, and if they are not dumping stock, I'm going to stick with the trend. In fact, they continue to accumulate stock, showing that they're putting money to work at these levels. Number 2 is the major averages still continue to hold their 10-week, especially on the NASDAQ composite. As you can see here, it's been holding this green line here, the 21 EMA. And the S&P and Russell continue to hold their 10 weeks. So that's a good sign because that's also an area of institutional support. And again, if the institutions continue to support the markets, that's what I'm going to stick with. Now, the leaders, 90% of what I use to judge the strength of the market is on the price action of the leaders. The leaders continue to act well. Some are a little bit extended, but I think we are going to see sector rotation, meaning if I pull up a chart of the S&P 500 here, while the NASDAQ, for example, is a little bit extended, the S&P has just been basing for a few weeks here. Now, this is the sort of bigger picture that I've talked about, is we've moved off of these lows in March and April, and we were around 2750 to 2950. I think we are going to put a base on top of a base, meaning we're going to just continue sideways here to consolidate these recent gains and then eventually move towards new highs over the summer or into the fall later this year. And what I mean by sector rotation is maybe when the NASDAQ and some of the leaders are extended, that could correct through price or through time, and then we could rotate into some of the lagging sectors such as financials, energy, transports, some of those sectors, just to constantly keep the market grinding higher. And it's going to be very difficult, in my view, to short the indexes over the second half of the year. Now, another reason for my bullishness is the Fed. As they say, don't fight the Fed. Good luck fighting all the global central banks around the world that are pumping in money into the systems. It's a globally coordinated effort to keep interest rates low and the markets high. Now, some people have said when the Fed changes their tune or when they pull back from all this, the markets are going to drop. Of course, that makes sense, but they haven't hinted at that at all. In fact, they've said if things get worse, they're willing to do more. So again, don't fight the Fed. It is a very powerful thing. Whether you agree with it or not, that's a huge backdrop and favorable for equities. Sentiment is another reason. The market tends to fool the majority. And even though, going back to the NASDAQ composite here, I've never seen this before, even though the market is at new highs, usually as price goes up, sentiment goes up and people become more bullish, and vice versa. When price goes down, people become bearish. I've never seen so many bears with the market at new highs and the S&P close to new highs. Now, I understand the reasons for this, but this huge amount of cash, huge amount of doubt, when the market starts to roll over, this rush into puts, that amount, the 1 foot out the door attitude is what, in my view, is going to keep us going higher. Now, keep in mind, of course, as I reset the lines here, of course, we're going to have shakeouts and pullbacks and corrections along the way. They might come in the flavor of what we've seen so far, where, early May, we saw this quick pullback. And then again on May 12th and 13th, a quick pullback. In June 11th and 12th, and then at the end of the quarter, meaning along the way up, we could see these sort of 1 to 3 days, 6 to 8%, maybe even 6 to 10% corrections on the S&P and the NASDAQ, just to keep the bulls in check and just to keep, the market at least some sort of digestion of these gains. Now, if that's why I say everyone should know their time frame. If you're a longer term holder, stick with the trend. If you're a shorter term trader, there's nothing wrong with taking some profits into the strength and having some cash for these pullbacks. Now, if on these pullbacks everyone is rushing out the door and everyone continues to be scared, that in my view is what's going to keep us from having any sustained pullbacks. Of course we're going to see pullbacks and corrections along the way, but sustained ones with everybody so scared, in my view, is what's going to keep this market propped up. Now, of course, the logical question is, what would get me to change my mind if any of these things I talk about change? Meaning, if we see distribution, especially a short group, a short period of distribution over a 3 to 4 week period. If the major averages close below their 10 week, if the leaders start to fail, if the Fed changes their tune, which I don't think they will, and if sentiment gets too bullish. And that's why I'm going to continue to update you through these twice a week videos, through the stock screening webinars that I do. I'm going to do my best to analyze and interpret and hopefully keep you on the right side of the market, as I have so far, by constantly interpreting this market as best as I can. Now, to jump into 5 stocks, and as I mentioned again, I did a leaders video for the new members on May 4th and June 17th with a great group to focus on. Some of these stocks are in that video, but I wanted to give you some things that might be buyable around this time. Seattle Genetics, and I know I discussed this in the past weekend video as well as in other recent videos. Seattle Genetics I talked about as one of the stocks on April 6th when the NASDAQ had its follow-through day and it broke out of this space. O'Neill talks about when you have a follow-through day, look at the new high list, and Vertex and Seattle Genetics were on the new high list. I talked about how I took a position for clients around 123, and then it pulled back on light volume around 120, and then it just broke out nicely. I even tweeted out when I took some profits around 166, and again, I forget the exact number, but I did tweet it out. And then when it pulled back to its 50-day around, I think it was 144, 145. Again, I apologize, I forget the exact number. I tweeted out how I added to the position. I think this is a cup with high handle here. This is a combination, as I've discussed in the seminar videos, trying to put everything in your favor to help with probabilities of success. Great technicals, great fundamentals, option activity, following some of the smart money, the Baker brothers, some of the sharpest money managers in biotech. This is one of their larger positions, huge pipeline of drugs, and that's what I'm trying to do. Doesn't mean it's automatic, but of course, that's what I'm trying to do, is keep you on the right side with some of these stronger stocks. Now, a quick note before I get into the other ones is, number one, if they close below their 10-week, assume I'm going to stop myself out because I can't handhold everybody through these names. And if you miss some of these names, you can use the 21 EMA or the 50-day as support. But again, if it closes below the 10-week, which is right around the 50-day on a weekly close, assume that I'm going to stop myself out or at least reduce significantly. And again, I'll update you if I do that on any of these positions in the twice-a-week videos. Now, CHGG is another one, CHGG. I think this is going to be a monster. I think this goes 100 plus over the next 6 to 12 months. I talked about, I missed this breakout of this big base here. I missed this breakout here. And I talked about how I entered it on this pullback near the 21-day. It's sort of building a cup with handle here. There's great option activity, huge potential, huge earnings and sales growth. And I think this one goes higher into year end. IDYA, I want to give you a mix, not just, a little bit of maybe a speculative name. I'm also going to discuss some large caps, mid caps, and so forth. This is one that showed up on my screens, also owned by a lot of sharp money. It popped here recently on their deal with GlaxoSmithKline, GSK, and it's showing a secondary here, but I just want to explain that this is actually a reverse inquiry, meaning usually biotechs have good news and they do a secondary and it might dilute shares. A reverse inquiry is when some of these sharp well, it's when people ask for them to release new shares. And in this case, there were some sharp biotech funds that asked them to release shares, and they did so. There was also some insider buying, and it's got a 3 weeks tight on the weekly chart. I've discussed this with a couple of my strong biotech resources because, as I've mentioned, there are people who are way smarter than me in certain sectors and in a lot of sectors, actually, and I use them as resources, and both of my biotech resources have approved of this one. And again, it's a 370 million market cap. I think it could see 20 or higher going into year end. Crowdstrike is another one I've talked about. I love this one. There's a lot of great software names. I've specifically liked cloud security, internet security with the software names, as more people are working from home and companies need to beef up their networks and their security. Now, one of the main things I want to point out, talk about all the things in your favor: explosive earnings and sales growth, great technicals, owned by sharp funds, tons of put writing, call buying, just breaking out of a technical base. There's just so many things in your favor here. Yes, it is a little bit, high valuation, rich valuation wise, but you get what you pay for because you have to pay up a little bit for this explosive growth. Now, one of the things I talked about is when I interpret weekly charts, I like to look at the big bars of volume, and I've noticed in this base, almost every big bar is accumulation while it formed its IPO base. Now, the reason this is important is because I pulled up a weekly chart of Sarepta, and when this built a nice base, they had great data here towards the end of 2016, and when this built this nice base around $30 here, you can see huge bars of accumulation. I've seen this in a lot of stocks. In the bottom of the base, showing that institutions, huge footprints of institutions putting money to work for longer term gains. This was around $30, $40. The stock's above 160 now, but the point is these are the footprints of institutions accumulating shares in the base. Another example is Palo Alto Networks, PANW, which when it IPO'd back in 2011, 2012, formed this IPO base here. You can also see in the base when it built this sort of cup with high handle on the weekly chart, just huge bars, the majority of the big bars, as you can see all the way up, huge footprints of institutional accumulation before it went from 60 to close to $200. So going back to Crowd's chart, you can see those big footprints in the chart. And there's also others. LinkedIn, which I don't have the chart. They were bought up by Microsoft. SodaStream, I remember I tweeted about this one back in the 20s and 30s and 40s. And I ended up getting bought up by Pepsi, I believe, for $144 a share. But same thing. It had these big footprints on their charts. And that's why I like this one into year end. And then one last one is CRNC. I think this is a possible high tight flag. I missed this one because I follow spinoffs. This is a spinoff of Nuance, and it broke out of the space, and I missed it. Honestly, there's just sometimes too many stocks to watch, and I think this is sort of a high tight flag here. Great growth in the AI space software. Their software's in almost every single car that's being made out there. Especially with a lot of the driverless cars and so forth that are coming out. Now, the key thing with spinoffs that I've discussed before is a lot of times big companies will take a division that has, unique growth or explosive growth and spin that off. And these end up being huge growth situations. Off the top of my head, I talked about, there's so many examples throughout history. Lucent was a spinoff of AT&T. Chipotle was a spinoff of McDonald's. Even Connexent was a spinoff of Rockwell Communications back in the 90s, one of the chip names. What was another one? The Zoetis is a spinoff of Pfizer. Coach, believe it or not, was a spinoff of Sara Lee. Doesn't mean every spinoff is going to be a monster, but Nuance spun this out. Great technicals. Again, $1.5 billion market cap. I think this could be easily a 4 or 5 billion market cap with their software going in so many cars. And again, with all of these IDYAs. Keep in mind, if you miss them, use the 21 EMA for support, the 50-day for support, and of course, still have your risk measures in there because, and your discipline, your stop loss discipline, especially for the longer term holders. If these close below their 10-week, of course, you got to be open-minded, and that's when I will change my mind if the institutions are no longer supporting these stocks. So again, just to review, I'm bullish into year end because of little distribution, holding the major averages, the Fed's on our side, the leaders are acting well, and sentiment's very poor. If any of those change, I will, of course, change my tune. I love Stanley Druckenmiller's line of one of the reasons, one of his superpowers, he doesn't say superpowers, but one of his strengths is his ability to change his mind quickly. And that's why you need to be open-minded, and I'll do my best to continue to analyze the markets and present this analysis twice a week in these videos as well as in the webinars. And just stick with the trend. Don't complicate things until things change. I hope you found this helpful. If you have any questions, you can always email me, and I'll do my best again to continue to update as the market shows us more price action and as we continue to analyze the markets. Thank you so much. Appreciate it.